Good day, everyone. It's a new day in the world's financial markets. Today is October 20th, 2025, and this is part number 1. In this part, we will talk about how gold has been acting lately, how it's been moving lately, and how it has moved in the past, and what we think gold will do in the near-term future, as in a few weeks ahead. So we'll start with the daily chart. We're looking at the daily chart right here. Each bar is 1 day. And we can see clearly where the support is. It's the yellow line right now at 37.90 or so. It's a rising line. It will keep rising. And at some point, the price of gold and this line will meet somewhere. Okay, but I don't think it's going to be where we are now. It's going to be lower. I don't know how much lower, though. I suspect somewhere below 4,000. Right now, we're at 42.54. Last Friday was an incredible down day. We dropped 190 points from 43.79, which is a new all-time high, to 41.86. About 190 points in 1 day. Now, that's a big drop in 1 day. Right now, we're at 100 points a day average true range based on the last 9 days. So now gold is expected to move within 100 points as part of the norm. Normal for it to move 100 points. That's the average. Okay. So given the fact that Friday was a big down day, it's very important that we kind of wait a few days to see how the market acts. I'll take you back to how the market acted when it dropped big about 10 days ago. Okay, right here. That was the 9th of October, right here. But then within a few days, we're talking about 3 days later, we already are making a new high. We eclipsed that old high and we came back like nothing happened. So it's very important here, now that we dropped, that we give it a couple of days, okay? And I think given today is Monday, I think we'll get the answer before the end of this week. Are we able to resume back up and make a high, or take out the 41.86 and head lower, okay? The next few days will tell us. If we head lower, then the odds are huge. We would have peaked and we are headed down to this support area I talk about. Now, as far as equities, S&P is moving within 90 points a day. That's average based on the last 9 days, average from high to low or vice versa. NASDAQ moves within 463 points a day. That's normal now for NASDAQ based on the last 9 days. We like to set our risk at 40% of the average range based on the last 9 days. So for gold, we're setting the risk at 40 points move against our entry. Of course, the actual size of the loss will depend on the size of our position, but we will allow up to 40-point moves. For the S&P, we'll allow almost 40 points. For the NASDAQ, we'll allow 170-point move, max move against our position. But we will reduce positions because those ranges, those kind of risks, we're allowing the risk. It's normal for this market, but it's not normal if you have a big size position. So adjust positions accordingly so you can withstand this normal volatility that we're in right now. It's not normal, but it is. It's now becoming the norm for now. We'll come back to some normality or normalcy later on, but right now, that's the new reality that we are in. So adjust accordingly. We'll come back later today by 9 a.m. because we gather data from about 3 a.m. to 9 a.m. Eastern time. And then we'll determine the best course of action for today and today only. How we will transact, whether gold or equities, whether we buy, whether we sell, or we trade from a sideways formation. So until that time, I wish everyone the best of luck and thank you.